all, HCL was ranked as the number one company in Time Magazine's World's Best Companies 2024. Our services business grew 1.6% sequentially and 5.9% year on year in constant currency. And this is despite the headwind we had due to the divestment of the State Street JV business. Our IT and business services grew 1.8% sequentially and grew 6.2% year on year, while our engineering and R&D business grew 1.1% sequentially and 4.3% on a year on year basis. In terms of booking, we won 12 deals from services and 8 deals from software, bringing the total to 20 deals in Q2. Our total booking TCV for Q2 stands at $2.229 billion. Now, coming to the geographies, all the three geographies grew sequentially this quarter. Our rest of the world business clocked in a strong sequential growth of 7.2% in constant currency, which was largely driven by our financial services and manufacturing businesses. From a year on year constant currency perspective, Americas grew 7.5%, Europe grew 4.2%, while ROW declined 2.6%. On a sequential basis, our top three performing verticals were retail CPG, life sciences and healthcare, technology and services. And on a year on year basis, the top performers were telecom, manufacturing, and retail CPG. We continue to grow our client category in a very impressive way because of the focus that we have in cross selling of our services. On a quarter on quarter basis, we added four clients in the $50 million category and four clients in the $20 million category. In terms of Gen AI, I'm very pleased to share that this quarter has been marked by significant achievements in our Gen AI related programs. We've seen strong wins with most of our deals incorporating AI capabilities. Our Gen AI platform, AI Force, is gaining widespread adoption for service transformation among our clients. We continue to witness excellent traction in AI and Gen AI opportunities, driven by our offerings such as HCL Tech AI Force, HCL Tech AI Foundry, and the AI Labs. Notably, AI Force is now integrated with Microsoft GitHub Copilot and will soon be enabled as a Copilot extension, providing unmatched extensibility and a broad range of use cases. We've also entered into strategic collaboration with uh, AWS and Google Cloud to accelerate Gen AI adoption. HCL Tech AI Force is now integrated with Anthropic Claude 3 in Amazon Bedrock. These developments position us strongly in the AI landscape and demonstrate our commitment to innovation as well as service excellence. Looking ahead, our pipeline continues to grow robustly, demonstrating a strong and well distributed presence across business segments, verticals, and geographies. Gen AI presents a particularly exciting opportunity, growing at a commendable pace. Our clients have already begun to reap the benefits and value from their AI and Gen AI projects. This trend underscores the significant role technology plays in driving change and in enhancing business outcomes. Overall, this reiterates the fact that clients continue to value technology and its impact on our businesses. We, however, remain cognizant of the geopolitical factors and global economic conditions which can impact growth. Looking ahead, I'm thrilled to share that we remain very positive about the opportunity. We've been recognized as India's number one company in Time Magazine's World's Best Companies 2024. This remarkable achievement inspires us to be even more optimistic about our share in the technology spend for our clients. We're committed to contributing significantly to the goals of our employees, clients, and shareholders. With that, I will hand over the commentary to Shiv Walia to provide more depth to our financials. Over to you, Shiv.
Thank you, CVK. Good evening to all of you in our financial earnings call. me walk you through our financial performance for the quarter. Start revenue performance. Total quarter is rupees 28,862 crores, which is a growth of 2.9% quarter on quarter, 8.2% year on year basis. To the services side, services revenue came in rupees 26,089 crores, which is a growth of 0.9% quarter on quarter and 7.8% on year basis. Software revenue for the quarter came in at rupees 2,085, growth of 2.7% on quarter and 1% on year basis. I'm happy to share that this represents our highest ever year-on-year growth for software business. Moving on to the profitability matrices, at 362 crores at 18.6% of revenue, 149 basis point quarter and up BPS on a year-on-year basis. 1% quarter on quarter, 8.7% on a year-on-year basis. Income for the quarter is rupees 4,235 crores at 4 revenue. I would also like to spend a minute on our return on invested capital, ROIC. Our ROIC to our ongoing focus on profitability and management. The last 12 months ROIC is at 35.7% for the company, 3 BPS year on year, and services ROIC now is at 43.5%, up 400% BPS. And thanks to our good performance, software ROIC at 17.8%, up. Cash generation is another highlight I would like to focus your attention on. Our cash generation remains very strong. 909 crores. While cash generation was rupees 19,800, and our balance sheet remains strong with gross cash at rupees 28,800 crores and net cash at rupees 26,521 crores. Operating cash flow to net income conversion is healthy at 126%, and flow to net income conversion is at 100. This cash generation has improved on back of our improved DSO performance. Total DSO including unbilled is currently at 79 days, a 3 days improvement quarter on quarter on a year basis. Shareholders, the diluted earning per share for last 12 months came in at rupees 62.02 rupees, which is up 8.9% year on year. The board has declared an interim dividend of rupees 12 per share for the quarter. The board date is 22nd of October 24 and the payment date of the same week 30th October 2024. That brings our look at rupees 50 share, effectively distributing 86.9% of our net income. That's all from my side, and now I am handing it over to Kalyan Kumar for an update on software business. Over to you, KK. Thank you.
Thank you, Chef. Good afternoon. Thank you, CVK, for the opportunity to share the HCL software commentary. We started to witness early results in the transformation which for HCL software, which is built around the 5 key focus areas, which I will talk about in a moment. Zooming on the JAS 24 quarter, our H1 revenue for software came in at about 676.4 million, which represents a 6.4% year-on-year constant currency growth. And ARR in September 2024 stood at 1048.9 million. I would like to call out some unique deals which we signed across the planet, which contributed to this jazz numbers. So starting with our business application software portfolio, which really enables CX journey for our customers around commerce, martech, and aftermarket. A large Japanese agri-tech provider has signed up for HCL Aftermarket Cloud to enable aftermarket across their entire landscape. And a large Belgian telecom provider is deploying HCL Unica MarTech platform along with the native HCL CDP capabilities to orchestrate their customer journeys. In our total experience portfolio, where our platform orchestrates multi-experience across DX, MX, EX, and CX, a leading digital-first Caribbean government has selected us to deliver a full suite of government to citizen services on our DXP low-code, no-code platform. We have a large US state government who signed up to deploying TX platform and expanding the citizen usage. And a large European defense forces is currently deploying DX along with Volt MX to enable their digital soldier service experience. So a lot of this is enabling total experience as a holistic portfolio. In the intelligent operations and cybersecurity product line, where our software drives a lot of shift towards AI-led human-assisted operations, a major retailer in South Africa started to deploy HCL BigFix Autonomous Endpoint Management, which provides end-to-end operations and management of the infrastructure, automation, and orchestration estate. A large private bank in India is adopting HCL Workload Automation or the Automation Orchestrator suite to deploy legacy workload automation across their entire mainframe product line. Third is we also have a very large oil and gas PSU in India, which is deploying HCL BigFix AEM, again, to manage their entire estate. In the Acti and data analytics portfolio, where we enable confidence-driven data analytics and intelligence and governance, a large UK-based SaaS ISV is deploying Acti and Zen to enable their entire SaaS ISV program. Also, with the newly acquired Xenia Data Discovery and Data Catalog platform, we've added about 40 net new customers, for which addresses chief data officers and other stakeholders, which will enable us in the data prep for Gen AI for a new vector of growth. So now let me give you a quick view on what are the five key areas which is really driving the momentum for our revenue. The first is around customer success and renewals. Our primary focus continues to ensure sustained innovation of our existing products so that we can drive better value creation for our customers. The second is around sharper growth product areas. So we identified areas like network commerce, platform-based commerce, data and AI-centric MarTech, total experience platform, intelligent operation software to really enable some of these core capabilities. Third, we've significantly focused on emerging markets. We've defined Americas, APJ, and Europe as mature markets, and we're focusing on Middle East, Africa, and India, South Asia as the emerging market focus. The fourth is we've significantly invested on a new software motion, which is about selling new products and capabilities. And we've added focus teams in these geographies with product sales specialists, technical advisors, marketing and business partner teams. And finally, extremely important is our 360-degree ecosystem. We're enabling our partners across hyperscaler, GSIs, and business partners into the market. I would like to thank 7,200 plus HCL software employees and the teams and our extended partner ecosystem to help us continue, nurture, and drive better delight for our customers. In closing, our purpose of bringing technology and people to build products to provide sustained value for our customers, partner, and communities will continue to drive success for HCL software. Thank you, and I'll hand it over to Ram.
His connection is frozen as well.
Shiv, from you, first up, thanks so much for speaking to us. First time that we're speaking, so hi from my side. If you can just help us with a walkthrough of the margins as to what really aided it, and in Q3, what kind of impact should we envisage of the wage hike? Ram, if your connection is better now, a word as to the net headcount decline that we saw in the quarter. Are you back at the campus? Because there is a bit of a fresh addition as well. So if you can throw some light on that. And KK, just a question from for you on the software margins. If I have it right, the margins came in at 25.6% versus less than 21% last quarter. So what led to that 500 basis point improvement there? Is it better pricing or something like that which has come through? So yeah, these were the question, guys.
Okay, Anisha, thank you for the long list of questions. We will answer one by one. Obviously, there is nothing like bunching of revenue or anything like that. It's like a normal quarter where incrementally the demand was better. So, services uh, overall revenue came much higher than what we expected. So, that's really good fulfillment of the demand that was coming our way across all the verticals. We did share in the last quarter that we shared last quarter that all the verticals will grow sequentially except financial services, which was going to decline because of the State Street JV divestment. But even if you kind of exclude that, financial services has grown the strongest. So I think the demand, we did call out that we were already seeing some green shoots and some pickup in demand in financial services, which really played out extremely well. Demand was strong in FS all through the quarter, so it was really a fulfillment game. I think the similar situation we saw in technology and services and a few other verticals. And some of it is also because of the deals that we signed in the past, they got into execution. In addition to the pickup in demand and services, software business, where a lot of things happen in the last month and even the last week of the quarter, uh, definitely delivered a stupendous performance, which overall helped the revenue growth to be better than what we expected. And software performance also helps on the margin side, which was your last question, but that's probably all the revenue that comes above a certain level flows directly into the bottom line, and that's the uh, logic there. Shiv, over to you for the next question.
Civic, I missed that question. Could you please repeat the question?
Shiv, hi,
Anisha, could you
Anisha
repeat?
here. My question was on the margin walkthrough. If you can break it down for us as to what really contributed to the margin improvement, and in Q3, wherein we are expecting a wage hike impact to come in, what would be a reasonable assumption of the margins in Q3?
So in terms of margin walk for this quarter, it it improved by 149 BPS. So out of that, 52 BPS improvement was contributed by software business. Services business improved by 110 basis point, which was largely driven by operating efficiencies, and 24 BPS contribution came in from the favorable exchange movement. In terms of Q3, I think we are confident of delivering a good quarter, but difficult to call out. I would not like to call out the margins for the Q3 because we have given the full year guidance now, which is 18 to 19%, and we would like to stick to that.
Okay, Shiv, directionally at least, is it going to be similar to that 18.5, 18.6, or there could be a dip because of the wage hike impact?
No, as I said, we would like to stick to the annual guidance only, which is 18 to 19%, and we are confident of achieving those guidelines.
Sure.
I'll move
I think
forward.
CVK did answer my question on incremental demand clearly. If you can add a bit more color around that.
Yeah, incremental demand definitely got better during the quarter across multiple verticals. While initially we talked about financial services was strong, but financial services was strong all across, not just in North America. Europe and Asia Pac. A lot of growth in rest of the world was contributed by financial services. Then technology and services, life sciences, retail CPG, all of that had a good mix of efficiency-led programs and ongoing demand. A lot of it is data and AI related and SAP related. That's was uh, the nature of demand. And Ram, could you answer the rest of the questions?
Yeah, sure. I think there was a question on the headcount. Yes, there's a slight drop in headcount this quarter, but if you look at the headcount on a year-on-year basis, after normalizing for the divestiture that we reported last quarter, our headcount is still growing. Overall headcount has grown if you look at it on a normalized basis. I think you also had a specific question about the freshers. I think we are continuing with our fresher program. The campus programs are on. As I keep saying, our plans are generally made for a full year with a review each quarter. So we do make our moderations each quarter based on the demand movements. Into FY26, the cycle that we are recruiting now, I think the focus is more going to be on specialization that we will focus on in campuses, not just go by pure numbers. That's what is going to be the focus, and those plans are getting finalized. It will be done during this quarter, but the campus program is on. Year to date, if you look at our fresher additions, we've added 4,000 plus freshers year to date in this fiscal, and we'll continue the program.
And
Thank you,
thank you,
Ram.
CVK, for answering the question. So I don't need to answer.
Yeah.
Thank you, Ram. Thank you, KK. Our next question is from Reema Tendulkar from CNBC TV 18. Reema, please go ahead.
If you like this video, then like, share and subscribe to ET Now.